Hello guys, good day. Welcome to today's video. And today we are going to basically be discussing the opening range trading system. That is the opening range strategy. It's basically a time-based trading method that exploits significant price movement, of course, as you can see on your screen at the start of the session, right? Of course, you know we have several sessions. We have Asian session, we have the New York session, we have Frankfurt session, and all of that. So this video is going to be specifically focusing on trading the opening range of these sessions on the 15 minutes time frame, right? And also I would also have to show you how to adjust your time zone so you have like the best time entry. And outside of that, one might ask why the 15 minutes time frame. Like I've written here, it's particularly suitable for day traders. Persons who are position traders can go for higher entry time frames. And but for the purpose of this video, I'm going to be explaining the 15 minutes, which is by far the most popular trading system with respect to OB. It's the most popular time frame with respect to OB, 15 minutes time frame. Obviously, because it gives you a balance between the long term and short term price movement, particularly if you are a day trader or a scalper or a swing trader or an intraday trader, right? It would be best suited to use the 15 minutes time frame for entry. Also, you would also consider the fact that it helps you to filter noise. Okay, market moves very sometimes erratic. It moves in a manner that you may not be able to carefully predict, particularly in lower time frames. There might be a lot of false signals in the lower time frame, and so that's why I've chosen the 15 minutes time frame. It's going to help you sieve out a lot of those false signals, and it's up to you to backtest really and choose whatever time frame that you find to be best for you. But for the purpose of this video, we are going to be using the 15 minutes time frame, which in my experience I have found to be the best in terms of trading up. Now this video is for beginners as well as traders in the with traders who trade using the African and the European time zone, and then it's also for people who have little to zero knowledge about orb. Okay, and now the question is, what exactly would you be learning in this video? Okay, so you're going to basically learn the key components of the orb strategy. The orb is obviously the opening range breakout, right? So you're going to be learning the key component of the orb strategy, the opening range, which is the high and the low price of the first 15 minutes candle. I'm going to be doing a brief summary of candlestick anatomy. I'll be doing a brief overview of candlestick structure and anatomy, so you get what I mean by high and low. And then we're also going to be doing another component of the orb strategy is the breakout confirmation, right? A candlestick closing above the opening range or closing below the opening range for a buy or sell trade respectively, and then supported by high volume, right? We're also going to be looking at where to place your stop loss and then your profit target as well for either buy or sell strategies. And now at the end, we would consider the implementation of the orb strategy, which will be looking at backtesting the orb. On this video, I'm not filtering or choosing any day. We'll just look at the last 7 days, or okay, the last 5 days of trading. Okay, for this week, that is Monday to, I'm recording this video on a Friday. So we are going to be looking at the last 5 days of trading the orb. And then we are also going to be considering the orb strategy for London Open. We are going to be testing it on the last 5 days. We'll be testing that of Frankfurt Open on the last 5 days. And we will be testing that of New York Open on the last 5 days of trading. And then you have a little homework to go and back test the one for Asia. Okay, so let me just put this out there. There is no particular session that the orb strategy is completely recommended for. You would have to test it out for yourself. by back testing and forward testing it, and also trying it across different currency pairs. Now, what I would advise is, for example, as you see here, the Frankfurt session comes first by 7 a.m. in the morning. So if you are in a trade in the Frankfurt session, so long as the trade has not been invalidated by the trade hitting your stop loss, I don't think there should be any reason to enter the London session up in the opposite direction of the Frankfurt session. Let me repeat that in a much more clearer term. So if you have a trade going on the Frankfurt session, a buy trade on the Frankfurt session, I do not think there is any psychological reason, there's any valid reason rather, for you to enter a sell trade in London. If London gives you a sell trade, I would prefer that you ignore it, particularly if your buy trade in Frankfurt session is still very much active. But if London gives you a buy trade and you're sure of the entry, particularly maybe the candlestick is quite big, there's volume on your side, I don't think there would be any problem or any reason why you shouldn't take the same trade, since it is in the same direction with the first trade that you entered. Okay, so moving on, we are going to be going into our charts now to test this up strategy. But first off, I'm going to be doing a bit of candlestick anatomy when we get to the charts, and we would move on to test the strategy of up on London Open, on Frankfurt Open first for the last 5 days, same with London Open and New York Open. And we would give a win rate on each session. We would also look at the risk to reward ratio that is best suited for it. And then we would consider a few other important things, like losing streak, winning streak, the currency pair. For this video, for the purpose of this video, I'm going to be testing out the USD card and the Euro USD, right? Which is like my two favorite pairs. Although I am beginning to, I wouldn't say love, I'm beginning to like the USD JPY, although it comes with a lot of weeks too. But for the purpose of this video, we would be testing out the USD card and the Euro USD. So, like I said, before we look at the up, we will be considering the market is closed now, actually. Before we look at the up, of course, we're already in our 15 minutes time frame. And before we look at the up, we will just pick a random candle, both bullish candle and bearish candle, and look at the candlestick anatomy of those candles. That is the candle structure, high, low, open, close. Now, for all the candles, right, the high and low price basically can be identified in the same place. The high and low price can be identified at the same point. The only difference for bearish and bullish candles is that the high and the open and close rather is different. The open and close is inverse depending on which of the candles you're looking at. So we'll look at the bearish candle, this last candle at the market close here, this one, right? And so we are going to be spotting the high and the low. Obviously, for those of you who already know this, you could probably skip this part. This is the highest price of this candle, and this is the low of this candle, right? It's the same thing for bullish and bearish candles. It's basically same thing. So for bullish candles, for a bullish candle, okay, let me just put this in here. This is the high price, okay, and then this is the low price for the bearish candle, and we are going to look at the open and the close. Okay, this is the lowest price, right? The lowest price for the bearish candle. Now, for the bullish candle, for the bearish candle rather, still on the bearish candle, this is the open. The upper part of the body is the open, and the lower part of the body is the close. So this is the open, right? Opening price for this particular candle, and then we are going to look at this. This is the closing price for this. And the reason is because it's a bearish candle, obviously, because price traded lower um, during the during the period or the time frame of this particular candle. So price opened at this point, which is the opening price, traded high to this point, which is the highest price, and there's no way of knowing this until the candle closes, right? So what that automatically tells you is that you do not have to make hasty decisions in trading up whilst the candle is still forming. And you would know that a candle is still forming by the movement of that candle, and there's a tiny time bar which is usually around this area showing you the countdown of that candlestick formation. Now, since this is a 15 minutes candlestick, 15 minutes chart, every candle here takes 15 minutes to open, form, and close. Every single bar you see here, every candle you see here takes 15 minutes, exactly 15 minutes. So in this particular candle, you have the open here, and then buyers came in to push the price higher. Sellers came in, it's a pressure. Everything you see on the chart is basically the buying and selling pressure. Um, Sellers came in and then they pushed the market all the way down to the lowest price. And then towards the end of the trading time of these 15 minutes, buyers came back in and pushed the market to this point. So it opened here, went as high as this place, traded back to go as low as this place, and went back up to close here. Now, for a bullish candle, let me pick a random bullish candle. Okay, let's use this bullish candle. In my chart, the setting obviously is white for bullish candles and yellow for bearish candles. I think I've explained this in the previous video about, removing emotions from your trading. And one of the ways that you can easily do that is by, changing the colors of the candle. Red spells out danger for you, green gives you hope. There's a sense of emotional attachment to those colors. And so what I have done, what I discovered to do was to change the candlestick colors, which is why you have yellow and white colors that are way cooler, and they have zero or little emotional attachment to them. So for bullish candles, still the same thing with the high. This is the highest price of this particular candle, right? This is the lowest price of this particular candle. Now the difference is in the open and the close. So for bearish candles, they open above and then close below. But for bullish candle, they open below, which is this part of the body, and then they close above the opening price, which means they are what? Bullish candles. When price opens here, trades lower to this point, trades back high to this point, and closes here. If you watch a live candle forming, you would see what I am actually talking about in terms of the movement of price. Okay, so let me just also label this. So this is the high price in that 15 minutes of trading activity. This is the low price. Same thing with the bearish candle, but the difference here comes in the opening. The opening is below the closing, so it opens lower and then closes higher, which is why it is known as the bullish candle. Opens lower and closes higher. So this is the closing price. Okay, now this is important when we go into the orb, because you need to know when a particular candle closes above a high, closes below a low, and all of that. Those are quite important. So you could take a screenshot of this, and of course you should already know by now that these lines are the wicks, and then this body, this is basically the body, this is the body, this is the wick. You're supposed to know that. It's basic candlestick anatomy. There are previous videos in this channel talking about that. Okay, so now let's go into setting up your trading view for the orb strategy to make it easier for you to identify opening ranges and trade opening ranges. Okay, to get okay, so we are just going to take all of this out. 45 joins. Geez, we're going to take all of that out. So to get before we go into setting up our indicators, right? Quickly, we'd have to just come to the settings button. If you're using your phone, just check on the right side of your screen when you open your trading view chart. You would find the price and you would find this settings button just below it. So you click on the settings button, you scroll down and go to more settings, and it takes you here. We just want to make sure this, when you go to symbols, right, we just want to make sure that the time is set to what you have here, UTC +1, which is basically London time, right? Okay, you just want to make sure that is set. When that is set correctly, you would see your timer, your time zone here, UTC +1. Now it's 3:28 a.m. on Saturday morning. Okay, so basically, like I said, we would be back testing the opening range breakout for um, the opening range breakout. Geez, backtesting the opening range breakout for London session, Frankfurt session. We'll start with Frankfurt session first for the last 1 week, and then we do London session, and we do New York session, and then you'd have to go and do Tokyo session on your own. So first off, let me go back and start all over again. So we are going to add one indicator. I don't use too much indicators on my chart. It's called the TMA overlay. So just on the down part of your screen, if you're using your phone, you would find your indicator add tab. So you just click on indicators and type in TMA overlay. So what we are going to basically do here is we are practically going to disable everything in this indicator except the session time. Okay, this under input, you disable everything else except the session time, and you keep this at 7, session 7 also, right? 0, just watch the figures closely, and this is also 0. You could brighten it up a bit so you don't you can easily notice the difference. So session end time, we're looking at, let's say 5. Okay, no, 5 o'clock is 17. So let's say 17. And the reason is because that covers both London and Tokyo. So you come to style and you switch off. That covers both London and Frankfurt and New York session. So that's for that. So you just come back to this point, change the color. I find that the darker blue, yeah, that's better. So what we want to do here is we are looking out for, this is 1 p.m. Sorry, it's not correct here. So you go back to the setting of that indicator, and then you change. It's important that you change this time zone as well. Change it to Europe London, right? Europe London. It's going to make the chart go back to where you're supposed to have the time. And then if you check this out here, this is Friday 18th of July, which is the day I'm recording this video, right? The day before the recording of this video. And then this is 7 a.m. Frankfurt open. If you go back to our chart, let's briefly go back to our chart. I said Frankfurt open, the first candle, the first 15 minutes candle. So we defined the opening range, right? And we said the opening range is established by marking the high and low of the first 15 minutes candle after the market opens for the chosen session. For example, Frankfurt session. So let's go back to our chart. So we are going to be looking at the 15 minutes. This is the first 15 minutes candle after market opens, and this is Frankfurt session. Okay, so what we are doing here would basically be to mark out the high and low. I'm going to be using a rectangular tool. Let me zoom in a bit so you find it a bit easier. Sorry. So this is the first candle, and like I told you, when we're doing candlestick anatomy, you basically just have to mark out the high and low of the candlestick, right? And so you do this. So you have this, and you mark out the high. This is the high, and sorry, you mark out the high, and then you drag it up until you have the low. Look at my reference candle here. Okay, So let's zoom this in and make sure we have that really quick. You would not do it as slowly as I'm doing it, right? Because obviously the market will be moving. Sometimes the market will give you ample time and opportunity to enter a trade, even though you are quite slow. Like right here now, there was no valid signal up until this point, which was over an hour later, almost an hour, no, more than an hour later, okay? Over 60 minutes after the orb. So you, in this scenario, this is a perfect scenario. You would have had the best time to, open up the trade, open up your chart, monitor the breakthrough or the breakout, and just feel the market, and then you wait for your entry and you execute. Okay. So that being said, let's quickly. This is the high of the orb. The orb is this 15 minutes candle in Frankfurt session. That is the 7 a.m. 15 minutes candle. Remember, we're on the 15 minutes time frame. We're backtesting the Frankfurt session for the last 1 week. This is not enough sample size for you to decide that this is the strategy that you want to use to trade your account. Ultimately, I would advise that you go out and backtest over a longer period of time across several asset classes. Okay, so we've used a rectangular box. You can actually use a line, but I prefer this rectangular box to this rectangular tool rather, to mark out the high and the low of this candle. So what you do here is, like I said earlier when I was explaining the orb, you basically mark out the high and the high and the low, and you wait for a candle to break. Now, one of the major problems that I find with people who trade orb is that oftentimes they try to predict the market, or they commit a certain type of blunder that I mentioned earlier in a different segment of this video, which is they don't wait for the candlestick that breaks the orb to complete formation. Okay, so each of these candles take 15 minutes to form, and you would find that there are persons who, once this candle breaks below this, they wouldn't wait for it to close, they would enter a trade. And of course, you watch what happened here. Towards the end, it rejects and goes back up, right, and then closes here, right? Same thing happened here. So this is a fake breakout, this is a false breakout, this is a false breakout. So there were like 3 false breakouts that, if you were not patient to observe the candle closing, or at least wait for the last 15 seconds of the candlestick, 15 to 30 seconds of the candlestick, that's the basic rule that I have. You cannot say that a candle has finished forming until the candle closes, or the last 15 to 30 seconds, because there isn't much move it can do within that period of time, although the market can be wild sometimes. Okay, so all you have to do here is you basically wait for a candle to break the low and or break the high, right? You wait for it to break and close below the low, or break and close above the high. And now what that does is, if it breaks below the lowest price of this candle, this is the 7 a.m. candle, remember, if it breaks below the low of this candle, which it doesn't have a wick, so both the body is both the open and the low in this case. So if it breaks below and closes below this low, then you have a sell trade. If it breaks above the high, then you have a buy trade. Okay, so in this example, one can quickly just see that you have a sell trade. Look at the line of the price, the lowest price of this candle. This candle closes inside the range. 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 When I mean the range, I mean the range of this candle from the high to the low of the candle. This candle still closes inside the range, and then you see this guy closes. This is the closing price. Remember the candlestick anatomy section? Yeah, this is the closing price of the candle. This is the closing price of this candle, and it closes below the low. So what do? We enter a sell trade right here. Let me use the short position to, we enter a sell trade right here at the close of this candle, right? And now the question is, where do we put our stop loss, right? Where do we place our stop loss? We place our stop loss at the high of this candle. the high of the orb. If there's another candle, let's say this candle forms here and goes high but fails to close above it, we place our stop loss at the high of that candle. So we are placing our stop loss at the high of the orb. Some persons also would rather prefer to place their stop loss at the most recent swing high, but I find that to be a bit too risky, and sometimes it can also be very profitable in that your risk to reward ratio can be easier to meet when the stop loss is tighter. But sometimes price can just come back in with a wick and take you out of the trade and tank back into your direction, just like it happened here. So imagine somebody entering a trade here and placing a stop here. Price will just come, take you out, and then go back in your predicted direction. So I find that it would be better that you place your stop loss on the high. In a sell trade, your stop loss is placed on the high of the orb, right? On the highest price of the orb. In a buy trade, the opposite would be the case, and I'm sure that we would find buy trades when we are back testing. When we get there, we'll do that. So in this scenario now, you would enter somewhere around here, right? And then you would put your risk to reward ratio. I usually recommend 1:2 or 1:3 for orb. So we are going to be using both of them to test, right? And I have a spreadsheet that I've been testing a particular strategy for the last 1 month now. It's just my think tank project. The performance of my strategy in addition to a particular trading system. So I would just use that spreadsheet to calculate or set out in a way how you should journal your trades with a spreadsheet, right? So let's plot this trade with this short position tool, and then we will now go to the spreadsheet and then do a bit of calculations. Okay, so if you're aiming for a 1:1, of course you have your nice 1:1 risk to reward ratio. In less than 30 minutes your trade hits take profit. This is on Friday, right? You can check it, USD card. So if you're aiming for a 1:2, of course your trade still hits a 1:2 basically in less than an hour. And if you're aiming for a 1:3, your trade hits a 1:3, your trade hits a 1:4, your trade hits a 1:5. It doesn't hit a 1:6. Those ones are really, really, very high targets that may not be able to give you consistent returns. You might suffer a streak of losses if you're using the high risk to reward ratio. So oftentimes I would personally advise that you use a 1:3. That is one of the most recommended risk to reward ratio, right? So if you're doing that, you would find that this trade would simply have hit your take profit so your entry was by 8:30 and your take profit was hit by 11:45. That's in about 3 hours time. Okay, and you're done trading. You're risking 1% of your account size and you've gotten 3%. So let's put this here quickly. So for Frankfurt session, winner, right? The trade was a winner, right? So you have 1:1, 1:1 through to 1:3. So this particular trade for Frankfurt session on Friday the 18th was a winning trade, and you were able to add between 1:1 and 1:3 percent of your account size, right? So let's go back to Thursday. We'll just go back and then we will check this out for Thursday's Frankfurt session. So yeah, this is Frankfurt session on Thursday. I'm not cherry picking, I'm just showing you this week. You can go back and check it on your USD card. So similarly, you have your 7 a.m. candle here, and you mark out the high and the low of the 7 a.m. candle with the box I just mentioned to you, right? And yeah, this is the high and this is the lowest price of this candle, right? So now you have the high and low of the candle, and you wait for price to close below, break and close below, or break and close above it. In this scenario, price broke and closed above it, right? So this is Thursday, the 17th of July 2025, 7 a.m. You can go back to your chart and check it out. So this would be a buy trade. So you pick up your long position tool and you plot at the close of the candle that broke and closed above the orb candlestick. So this is the range. This is the 15 minutes opening range. So when a candlestick closes above it, right, you enter at the close of that candle that broke and closed above the high of the orb. Your stop loss, just like we did in the sell trade, now this is the opposite direction. Your stop loss in a buy trade when you're using orb is the low of the orb. The low of the orb. Remember, I talked about candlestick anatomy and structure before we did this. Let me just put it somewhere there. The low of the orb. And now we check this out for 1:2, 1:3. So this trade hits a 1:1, right? Almost immediately. The trade hits a 1:2, right? You can see it here. It hits a 1:2, and then the trade hits a 1:3. I think it hits a 1:3. Yeah, it hits a 1:3. Let me be precise about this. Trading is a very precise endeavor. So let's just shift this to one side, and then okay, yeah, it hits a 1:3. Perfect. So you have two days winning, 2 straight days of winning trades, right? This is on Friday and this is on Thursday, right? So you have 2 straight days of a winning trade. This is not how it always is. Disclaimer, this is not how it always is. So let's mark this out again. Winner 1:1, right? True to 1:3. TP hit. So you have a Thursday winning trade of an additional 3%, and you have a Friday winning trade of an additional 3%. Remember, we are backtesting this for the week for Frankfurt session. Frankfurt orb, that's what we are testing out. So you would have to go back to Wednesday, and one of the major issues with this Wednesday candle was there was a major news on Wednesday, right? So let's look at Wednesday candle, and we would find that so we mark out the high. This would be a losing day already. You can see clearly that it is a losing day if you've been following the video. So we mark out the high of the orb, right, and the low of the orb. Yeah, so we wait for a candle to break below or above it. So the first candle that breaks below, the first candle that breaks and closes outside the orb breaks below the orb, which gives us what? A sell signal, which is this. We look for a short position tool. We place it at the close of the candle that broke below it. And in this scenario, like I explained on Friday, giving an example, if there's a candle that is higher than the high of the orb before the breakout, that is where your stop loss is supposed to be. Originally, your stop loss is supposed to be here. But then again, there were candles that closed or that traded higher than the high of the orb, and this is a sell trade. So before the confirmation breakout, right, this is the candle that has the highest price level before the confirmation breakout. Now, in this case, you would have lost this trade. So we are looking at what here? Minus 1% of account size. Right? So it's a losing trade. Okay, it's a loss. No, sorry, it's a loss. So minus 1% of account size. So we move on to Tuesday, right? And we find that Tuesday is also a losing day. Like I gave you a disclaimer earlier, it doesn't always work out perfectly, but it is profitable. I have backtested it over more than 8 months. 8 months of data on the 15 minutes time frame is a lot of data across different sessions. It is a profitable strategy, gives you a average of about 7 to 12% on a monthly basis. On a funded account, that is a very good return. So you have this. This is the orb candle. 7 a.m. Tuesday. The first candle after that breaks above it, right? So we have our entry here, and then we have the stop loss here, which is the low of the up, because there is no candle before the breakout that is lower than the low of the up. And then if you're doing a 1:1, it actually hits your take profits. 1:2, no. 1:3, no. So we are looking at TP hits here, 1:1, right? And then loss 1:2, and 1:3. So yeah, so you lose 1:2 and 1:3. And so we move on to Monday, which is the last day for this week. Like I said, we'll backtest only this week. If you want to do more backtest, you can on your own do more backtest, right? So we have this here on Monday for Frankfurt session, right? So we have the high and the low of the orb, right? And this is the orb. This is the up. This is the up. This is a false breakout. Just the wicks breaks out. This is another false breakout. And then if you look clearly and closely at the up, you would find that this candle is the one that breaks below the up, giving you a sell signal. So you have, you enter here, your stop loss is here, right, at the high of the orb, at the high of this price, because it is higher than the high of the orb. That rule is supposed to be known well by now. So your 1:1, your 1:2, and your 1:3, and your 1:4 TP gets completely smashed. But like I said, I recommend the 1:3. Okay, so you have winner, TP hits, 1:1 through to 1:3. So if you look at this, you would find that Monday, Friday, let's say you're risking 1% of your account size, okay? So you get 3% profit on Monday, right? You you lose one of those 3%, and let's say you're risking 1% of your account size, and you're trading a 1:3 risk to reward ratio, which is what I recommend. So you get 3% profit on Monday, you lose 1% of that profit on Tuesday, and then on Wednesday you lose 1% of the remaining 2%. So you're left with 1% profit on your account size. On Thursday you get 3% profit, right, which now gives you a 4% profit. You're on a 4% profit on your account size. And on Friday rather, you win another 3%. That gives you what? A 7% profit on your account size. Now let's do the math. 7% of, let's say, a $10,000 account size, that's about $700 if you're risking 1%. So I'm just saying, if you're trading with a funded account, 7% is $700. That's a lot. That's a lot. I would not advise that you risk a full 1% when you're starting out using this strategy. I would advise that you start with a much more conservative trading approach of, let's say, 0.3 to 0.5% of your account size, right? That would give you more edge to, gradually ease into the strategy without so much pressure on yourself, right? So that's for Frankfurt session. So Frankfurt gives you, let's record Frankfurt here. Frankfurt gives you plus 7% for this week, right? Or yeah, for the trading week. So Frankfurt gives you plus 7%. So we are going to, this is for USD card, by the way. Let me take out these guys. So this is for USD card. Frankfurt gives you plus 7% for this week on your account size. So we are going to look at we're going to look at London session, London orb. And like I said, if I would test London independently though, but if you're using the orb, I would advise that if you take Frankfurt trades, until it hits stop loss, don't enter London. Okay, because sometimes they tend to move in the same momentum and towards the same direction. Okay,